So, friends, we are discussing a very interesting case of how carbon accounting is important and how the carbon tax would impact the trade. So, we are talking about a very specific case of carbon border adjustment mechanism, which is a climate policy wherein the European Union puts a carbon price on carbon intensive imports. And we are discussing a case of carbon intensive imports of European Union uh, like steel and aluminium from countries like India. So, uh, CBAM is a strict accounting system and it is not about statements or reports. It is basically a factory level accounting system, so which requires precise requirements. So, because it is a mechanism which is going to impact profits, okay, and it is not simply about the intentions about pursuing sustainability, this has to be understood very clearly in the carbon accounting course. So, what it counts is the scope 1 and the scope 2 emissions, where the scope 1 emissions are the direct fuel used by the industry in the manufacturing of carbon intensive products like steel or aluminium, and the scope 2 would involve the electricity usage. And what is important is to understand its correlation with the technology. So if you see that there are three primary ways of producing steel, right? And these three ways of producing steel would impact the emissions differently, right? This has to be clearly understood. So there are three bar graphs shown here corresponding to the three ways of making steel. The first one is the conventional blast furnace and basic oxygen furnace route or basic oxygen furnace process, which uses coal, right? And you know that coal is in abundance in India. So in this process, where the coal will shortly will call it as BOF process, blast furnace and basic oxygen furnace route. Here, the iron oxide is reduced to iron inside a blast furnace using coke. Coke is derived from coal as a reducing agent, and the resulting molten pig iron, the carbon rich pig iron, is then processed into steel in the BOF, that is, in the basic oxygen furnace, where the oxygen is blown through it to reduce the carbon content. And as you see, this is highly energy intensive process which has a largest carbon footprint, okay, largest carbon footprint, and hence it is going to affect it would be affected by the carbon tax which we are talking about. The second route is the gas DRI route, wherein DRI stands for direct reduced iron. Direct reduced iron means the iron is produced by reduction process using natural gas or gasified coal, okay, and this is relatively less carbon intensive as compared to the coal BF-BOF process, right? So the direct reduced iron is processed into steel in a furnace later. The third one is the least carbon intensive. Okay, it has the lowest carbon footprint, and this is because we are using a scrap steel in this process. The scrap steel, the secondary scrap steel, is melted in the electric arc furnace. So EAF stands for electric arc furnace, and thus this is a recycling route. It is a recycling route where the scrap steel is recycled, as a result of which it is having the lowest carbon footprint. So when CBAM is in process, when the CBAM is levied by the European Union, obviously the producers would opt for the cleaner production method instead of choosing the coal BF-BOF method, which is used in India, they would start using gas DRI and scrap BF. So one might feel that this is good because this is going to have a larger bearing on the climate goals, and it is a clean deal. Okay, but the second thing we need to understand is this is also being regarded as a protection tool by the developing world. For example, the EU CBM is considered to be a tool for industrial protection and revenue generation of the European Union, and just as like the tariffs which are levied by United States. So if you have tariffs or if you have a CBM, which is a carbon tax, though the goal is a broader goal of promoting sustainability, it could also be viewed as by the developing countries as hampering their competitiveness and protection followed by the developed world to protect their markets from the competitors. So this could be called as the irony of the climate action. So on one hand, we want climate action, and the other hand, we also want the developing world to export to the developed world and be rich. But as you see in this case of steel and aluminium, which accounts for about 10% of global carbon emissions, it has become a most protected sector in the developed world. Right? This is a second thing we need to understand. The third thing is about how the accounting is now becoming very important. The carbon standards which we were discussing, okay, they are now to be verified. The carbon accounting is to be done not by any person but by approved auditors like ISO for 14065 or by the rules which are given by European Union. And not all the auditors in the developing world like India, they qualify, and hence the verification standards would be very difficult to comply for many developing countries, and this would then be in a way acting like a non-tariff barriers for their exports. So for that, now it is important for the exporters to adjust themselves to this new carbon tax by identifying the qualified auditors and then collect the data immediately, because that is going to take time. Compliance takes time, as I had shown earlier in my presentation. Even the compliance has reduced the exports from India to European Union in a big way, about 20%. The second thing is the carbon auditors need to then have a maintain continuous verification for all the EU bound products, and they need to complete all this verification cycle before the CBAM is put into place. Okay, so carbon ready, means the exporters need to be carbon tax ready. That is a requirement for 2026. So carbon accounting has now become really crucial in improving the competitiveness of the steel and aluminum sector. So that highlights the importance and significance of carbon accounting, and it also highlights how carbon tax plays a crucial role in shaping the trade and impacting the competitiveness of different industries. I hope the concepts are clear to you now.